Check this out. If you own your own home, the next few minutes could completely change your financial life, I promise. Now let me explain why breaking your mortgage early, yes, breaking it, paying a penalty and switching to a loan with a higher interest rate could somehow save you nearly 15 years of payments. Sounds crazy, right? Like trying to lose weight by eating more carbs. But stick with me, because what do you think you're saving might actually be costing you a fortune. Most Canadian mortgages run on compound interest, which is a fancy way of saying the longer you owe us money, the more we get paid exponentially. Your payments feel predictable and responsible until you do the math and realize you've paid more in interest than the actual house is worth. But hey, the bank sends you a nice letter every year, so that's something. Basically, compound interest is like charging interest on interest on interest. Behind the scenes, your bank is having a great time collecting way more than you think. The product we're talking about is called Manulife One. It uses simple interest, which, brace yourself, is actually simple. You only pay interest on what you owe, not on last month's interest over and over. It also ties directly into your bank account, meaning your payroll deposits go straight towards reducing your debt, which is wild because most traditional mortgages treat your income like a separate entity, as if your money needs a permission to reach your mortgage. With Manulife One, your cash flow becomes a weapon, not sitting idle, awkwardly watching your debt pile up. With traditional mortgage, you're like standing on an escalator. You're just standing still. The escalator is slowly moving you toward your goal. You make regular payments. Progress happens, but it takes 15, 20, sometimes up to 30 years. You're relying only on the system to move you. In other words, you're the person on the airport escalator who just stands there while everyone else walks past. So you're heading towards your flight, but still miss your gate. With Manulife One, it's like you're walking up the escalator. You're still on the same escalator, but now you're actively walking up while it moves. Your income deposits directly reduce your debt daily. Every extra dollar, every step you take gets you closer faster. You combine the escalator's movement and your own effort. Result? You reach the top years sooner. In some cases, 15 years faster. Imagine that. Same debt, same income. You're putting your own money and income to work instead of letting it sit in a checking account and possibly paying fees. Let's break this down with an example. Suppose you have a home with a value of $600,000, a mortgage $300,000 at 2.99% interest, fixed rate, compounded semi-annually. Your mortgage payment should be $1,660 per month. Your household net income after taxes is about $8,000 a month. You have no credit cards debts, you pay them off monthly, and no other debts. Your household expense is about $2,500 a month. That includes groceries, utilities, insurance, entertainment, everything else. Your total monthly debt payments will be, including your mortgage plus expenses, about $4,160. That leaves $3,840 in monthly cash flow surplus. So we've got nearly $4,000 per month just floating around. And in the traditional setup, most of it just sits there, not invited to the mortgage party. With Manulife One, this goes as a prepayment towards your mortgage. Manulife has a calculator, and no, it's not the same calculator your bank shows you how much you're saving with compound interest. So here's what I plugged in. As we mentioned before, we have a property with a $600,000 value, mortgage $300,000. The rate was 2.99%, which gives us monthly payment of $1,660 per month. Again, we assume no other debts. Now, looking at the results, let's see how much we're saving. Here we are. There's a result, $54,385 in saving in interest and a debt-free life in 5 years and 4 months. That's 15 years earlier than a traditional mortgage, because apparently letting your income actually do something every day beats sitting in an account. Here's why this works. With Manulife One, your pay lands directly in the same account that's tied to your mortgage. That means the second your paycheck hits your account, your debt starts shrinking. Not eventually, not next month, immediately. Compare that to a traditional setup, where your money just hangs out in a checking account like it's on vacation. You leave it there because you've got a car payment next week. Maybe the mortgage comes out in 3 weeks. No big deal, right? Except it is. Because during those weeks, that money could have been reducing your mortgage balance and saving you interest. Instead, it's sitting around doing absolutely nothing, like an employee who clocks in but never actually works. Now multiply that by every single paycheck over the next 25 to 30 years. That's decades of unnecessary interest, all because your money was too busy waiting around. That right there is the quiet magic of Manulife One. Your income doesn't just exist, it goes to work the moment it arrives. Also, there are no fixed monthly mortgage payments because your income is the payment. And since interest is calculated daily, the less you owe on any given day, the less you pay that month. Simple, logical, and somehow still not the default option in Canada. Go figure. The calculator also gives you a year-by-year comparison of the traditional mortgage versus the Manulife One mortgage. In the traditional mortgage, as we see, it's slow, steady descent into the 20 years of debt payments. Versus Manulife One, you're debt-free in just 5 years and 4 months. Now, yes, clearly in the early years, you might pay slightly more interest, as we can see here in Manulife One versus the traditional mortgage. But you know what else happens in the early years? You destroy your principal. See how much principal we're paying in Manulife One versus in the current way? You shrink your debt like it owes you money. So do you want the convenience of paying a steady payment to your bank for the next 25 years, or beat the bank and pay off your mortgage in 5 years? If this video helped you see your mortgage and debt differently, hit the like button, share it. If you want help setting up a strategy like this, contact us. My info is below. Thank you for watching.